Most traders would take a look at this market profile and they would see that price retraced into an old high, continued lower, and broke market structure. So it might be that they would mark this as a confirmed break of structure, look for retracements for continuation trades. But that is not what happened. Let me show you how to effectively use proper shifts in market structure to take high probability trades like this 2R long on Euro CHF. Then I'll dive into some theory and then cover an additional example on USD CAD. So let's get into it. So I'm just going to take everything away here. And the first thing I'm going to do is overlay my higher time frame candles. So I'm looking at the 12-hour time frame and I'm going to overlay the monthly candle and the 2-week candle. So the monthly candle is going to act as my higher time frame and the 2-week candle is going to act as my intermediate time frame. And this is going to paint a much better picture of what's actually going on in the market. So when we see that price is retracing into what we thought was this high in the market, we basically get a sell-off. And what is price doing when it sells off? It is continuing bearish. It's doing that because the entirety of this monthly candle closed below its previous candle's low. So we have reason to believe that price will continue bearish, which it does. So we get this sell-off. Price then retraces into a fair value gap, a bearish fair value gap, and then creates a new price leg lower. But at this specific point, price is not breaking structure. It's not shifting structure. And there's nothing that you can read into this other than to see that what price is actually doing is liquidating the external range liquidity at the low of this monthly candle. So to make this explicit, this is the entire price action for the month of October to November. This is how price closed. What price then does is shift bearish in this fashion here, and it liquidates the low of the candle. What it also does is liquidate these pools of external range liquidity. So the previous 2-week low and the monthly low itself, which also represents another 2-week candle. So price is not shifting structure, it's targeting liquidity. So then what it does is shift. We come into a bearish fair value gap right here. We try to go lower and then price explodes bullish. So to zoom in and show you what actually happens here, we have a bearish order block at this level right here. We then get a bearish fair value gap, internal range liquidity within this price leg, which trades into and away. We then have the formation of another fair value gap with an overlapping bearish order block right here. So price trades into this internal range liquidity, tries to go lower, and then trades through. So the actual market structure shift is when this swing point here gets inversed. So this is the swing point at the high of the price leg. Price then shifts, creating new swing points. This being the swing low, this being the swing high. So what price is then looking to do is fill internal range liquidity in this price leg because it's liquidated these levels of key external range liquidity. And in doing so, as soon as we get a close of this monthly candle, we can assume that this is the higher time frame draw on price because we have manipulated this candle's range as well as this 2-week candle's range, and we've closed inside of both ranges. So we have a price leg, a true market structure shift at this level, and so we can then look for internal range liquidity. And we have a fair value gap right here. So I'll mark that in green. So the natural point for price to first liquidate is the fair value gap. And because price is moving aggressively, we can take an entry right there and then naturally cover the low that was liquidated. So on this higher time frame, this is the wick of the candle. It liquidated the 2-week candle and is now shifted bullish. We have our higher time frame target, so we can mark that. And this just plays out for a nice 2R trade. The actual market structure that you want to then track are the highs and lows in these price legs. So we get the creation right here of a new price leg bullish. This becomes the swing low. When we break structure, this happens right here. Then we create new swing lows. So we have one here, and then we have a new swing point as soon as we break through this price leg right here. So this becomes then the next bearish shift in structure. And what are we now doing? We're liquidating external range liquidity. And so we have new context to trade short. So this is how you actually use market structure shifts to get a strong read on the market. It's using them in conjunction with higher time frame candles. Let's dive into a short bit of theory. So what is market structure? Market structure shifts occur when price breaks through swing highs or swing lows. I've got a separate video on how to mark swing highs and swing lows, but they essentially exist at the opposite ends of price legs. Most traders chase every break of structure without higher time frame confirmation. They use fixed rules for mapping market structure, which means that they mistake fake breakouts for liquidations. It matters because staying on the right side of the market means you can get a lot wrong and still be a profitable trader. So let's take another look at USD CAD and a second example here. So at this point here, it looks as though the market is breaking bearish. So we have a retracement and then a continuation of the trend with a close below this swing point here, or this perceived swing point. So next we would expect price to retrace and continue lower, but that doesn't end up happening. And the reason for that is that this again is manipulation. It's a liquidation of the external range liquidity that sits at the low of this 2-week candle. So what ends up happening is that as we retrace here, we then pull back into this internal range liquidity. It's somewhat consolidation. We then get a push below and then a true market structure shift. And that is caused in the formation of a 12-hour order block. So price is stinging below, and then we see this order block on the 12-hour time frame get created. You see, it's this last sell candle before we see buy pressure into the market. So we have liquidated this external range liquidity, and we now have a high probability target for price. So we can then use that shift, that market structure shift, covering the low to take trades back to the high. So you then have pretty comfortable 1.75R trade. If you want to hold that, it does play out for a 2R trade. So again, even in bearish markets, don't necessarily take what looks like a conventional structure shift as a break of structure. What you need to do is understand the context of higher time frame candles and wait for price action to create internal range liquidity that you can use to take high probability longs or shorts in the market. So how do you actually apply this? So always mark confirmed swing points at price leg highs and lows. I have a dedicated video on how to do this, but it's key because you can then see when there are true structure shifts in the market. Wait for those structure shifts with confirmed candle closures, because what they do is create the internal range liquidity that you can use to take long or short trades, and always confirm in line with higher time frame bias. And that's seen through liquidations of external range liquidity at higher time frame candles. Enter from internal range liquidity in the context of intermediate time frames. So even if you're using the monthly time frame, you don't necessarily have to wait to see things play out there. You can use the weekly, the 2 weekly, and then execute on the 12-hour to take swing positions. My model is that I track and analyze 32 Forex pairs. I also track gold, silver, and Bitcoin. And I do this in conjunction with the monthly, 2 weekly, and weekly closes. And then I just wait and execute. Once you get good at this, you can do it in 10 minutes a day. And if you're consistent, you can take a lot of high probability trades. So if you want to know more about swing content, how to swing trade, and the types of trading that I do in relation to higher time frame candle ranges, then please subscribe to my channel and follow along for more information.